Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Tim Cyclesman Wood, editor of Cycles News and Views on Cyclesman.com. Welcome back to the show, Tim.
Thank you.
Tim, we have a listener question to start off the show. It's about gold. Jordan Carter asks, back in the 08-09 recession, the Fed managed to convince everyone that their policy of quantitative easing and low interest rates was only temporary, and that was at a time when the price of gold hit over $1,800 and since then plunged. Now, is it not possible when the Fed cuts rates again and initiates quantitative easing the market will be smarter this time and the price of gold will go up faster? Is that going to be the case? Will it be different this time?
I don't think so. I mean, one thing I've learned in this business is never say never, but no, the charts do not suggest that, and let me explain why. I have talked about how we're in this sixth economic cycle since 1800, looking at raw materials data, which is reflective of inflationary, deflationary cycles, if you will. That's what it's looking at. And as we stand today, we are literally in an inflate or die scenario, or a crossroads, I should say. And specifically addressing the answer to your question, and then I want to paint a little bit of a picture, and then we'll come back to it. But in 2000, coming out of the 2002 low, actually, all the way up into 2011, we were on the upswing of this last inflationary cycle. Now we are on the downswing of the inflationary cycle. What happened was that cycle was the last inflationary cycle was fueled by and large by those inflationary influences, or those I should say those reliquefaction efforts fueled that deflationary or that last inflationary cycle, or helped fuel that last inflationary cycle. Now that has rolled over. I mean, it's rolled over to the point to where you can't say it's carved in stone, but it's virtually carved in stone. I mean, it's rolled. Every indication, looking at data back to 1800, it's rolled over. So that's pretty strong data. So I think that because we're in this deflationary environment, unless they are able to reinflate, which that's some mighty hard odds to overcome here, looking at what I'm looking at, then no, I think this time will be different with gold, and it's going to go down with everything else. If we can, let me paint a kind of an overall picture without digressing too much, because you have to. If you don't understand the whole picture, it's hard to make sense of it. But basically, like I said, we're in an inflate or die scenario here. Last year, we saw a higher degree set up with equities, begin to take hold, and we declined, down into the December low. Since then, everything has obviously bounced, including raw materials. Raw materials bounced as well. When I say bounced, there's some lower level cycles. There's like a 3-year cycle low in commodities, raw materials, and if you're looking at the charts, I mean, it's real simple, but everything pretty much bottomed in December. Commodities, raw materials. You look at equities, and turned up. Well, the one of the problems with this advance here, and why it's taking on such a deflationary tone, is that the the advance with raw materials has already failed. It's already rolled over below its December low. And the other thing that we're seeing that is deflationary is, what's going on with interest rates. We talked about how interest rates would go lower, lower, lower. There's key spreads been watching one by one by one. The scenario that I laid out is, it's falling into place, and it continues to set up in a deflationary way, I guess you would say. If you look at, even Bitcoin, everything has bounced coming out of that December low. This recent advance in gold, going back to it has been very strong, no question about it. And it had an intermediate term buy signal on gold. I think it was May the 28th, the week of May 28th. And I'll be honest, I did not expect to see this advance take gold back up as high as it has. But it doesn't negate the correlation with gold and raw materials. You can do a simple overlay of the history. It's just it's historical data. And you look at this, break it down, look at it from a cyclical perspective. Weak raw materials equates to, weaker gold prices. That's a historical fact. Now, there are typically like non-confirmations, if you will, divergences, whatever you want to call it, at these major tops. In other words, what tends to be the norm, if you will, is that the raw materials data will lead. So it'll start to weaken first, and then it's like a leading indicator, if you will, and then you see it bleed over into other areas. So to bet that this time is vastly different than that kind of history that we're talking about is a long shot. So I have to go with the odds and with the historic, with the history. The same thing with crude oil. I realize crude oil is also bounced out of an intermediate degree low. Have had an intermediate term buy signal on crude oil as well as gold and as well as equities. I'm not standing in front of those signals or trying to deny the advances. They're there. So I'm not denying that. But in putting them in context, like I said, you can look at this raw materials data, and it also front runs oil. So all the while what I'm trying to say is while we're seeing the advance in Bitcoin and gold and commodity prices and even equities, it's camouflaging, if you will, just like, remember last year we talked about how the mainstream U.S. indexes and averages were camouflaging the setup that led to the decline to the December low. Well, now it's the same sort of thing in that what we're seeing is all these bounces, and this bouncing, it's camouflaging the deflationary setup that is quietly taking place. And it's not just the fact that we're seeing this with raw materials. It's being confirmed by what we're seeing with the interest rate spreads, but with interest rates themselves, with the decline. For example, in the short-term T-bill, I've been waiting to see that decline start, and it has. It's not to the point yet where it's forced a cut, the Fed to cut rates, but I think that's coming if this trend continues. Or I say if. I think the cat's out of the bag. It's just a matter of time. But everything is setting up here in with a deflationary tone, and I think that's what's got, or I don't think, I know, that's what's got the Fed so, I think, defensive. Look at how they did the about face back in December. So I think the powers that be know how critical the technical juncture is that we sit. And, like I said, it comes down to we're literally in an inflate or die scenario. And when I say inflate or die, again, if they can't somehow reinflate these underlying factors and turn them, then I think the deflationary scenario wins, and it's a battle until that happens. I mean, it's just like a tug of war. And it's just, it just drags on and drags on and drags on, and nothing kind of happens. But it does, like I said, it doesn't matter. It hasn't changed a thing. It's still setting up. And so the size of this is so vast that it's just very difficult to see and get your mind around.
We'll have more with Tim Wood right after the break.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Welcome back. We're speaking with Tim Wood. Tim, whenever recession hits, they start turning down interest rates in the hopes that it'll help stimulate things. But what we also find when interest rates are lower and real estate prices come down, banks are less likely to lend you money because they're worried they might not get their investment back if you default on the loan, and it just gets worse. Why do they lower interest rates when it doesn't seem to really help?
Well, what was the term I heard someone mention to me? We live in an expectation-based, what was the term? I can't remember what he said. Anyway, an expectation-based environment, if you will. In other words, it's jawboning. One of the most powerful tools is, that the Fed has is, their ability to tell people whatever they want to be, say, and then believe it. I mean, there is this illusion by most people that the Fed cutting rates in 2000, 2001, down into 2002, or in 2007, 2008 somehow saved the market. And so I think that, I think that's just an illusion to try to keep the cattle calm and I don't know, but it's not going, it's just, there's no historical precedence in this, last 20 years in that has merit.
Since the Fed was invented, there's been something like 18 or 19 recessions. So obviously their formula doesn't work, or are they just trying to pretend that they can affect what are natural cycles and things will take a dip and they will recover because that's just the way things work?
Look, they can absolutely affect the natural cycles. There's no question about that. For example, the reliquefaction that we saw coming out of, say, 2008, 2009. I mean, absolutely, they influenced that cycle. That's what blew it up. And so that jawboning, yes, they can, but in the end, they can't stop the inevitable. And it's like, okay, at some point, nature has to take its course. And what's going to happen now that we've moved into this rate cutting cycle again? I mean, we're there. It's coming together. They will follow the market. That's the perception. It's like, and it's kind of like what comes first, the chicken or the egg. I mean, yes, they have obviously some influence on the short-term end, but then yet they don't, because they haven't cut. Short-term rates are starting to fall now. Longer-term rates have been falling. Short-term are starting to catch up, and it is actually the short-term end that they follow. The market's going to force them to cut. They're not doing it to try to save the market. That's not the case. It doesn't work that way.
We also had people inquiring into Bitcoin and what's happening there. What is happening there?
Bitcoin, I think, is no different than anything else that we're seeing bounce. If you look at the charts, I look at everything structurally. When I say structurally, the cycles. And when you look at last year, remember we talked about, I mentioned it a while ago, the leadership with that topping process that led to the decline into the 2008 low. That was all, it was led by Bitcoin. But yet the structure, I say it was led by Bitcoin. Bitcoin was among the leaders. We had a number of indexes and averages. There was handfuls of them things that led, automotive and airlines and housing and, some of the foreign markets, and Bitcoin was among those. And what I noticed is that the structure with Bitcoin is pretty much the same as everything else. It's all ebbing and flowing to the same liquidity-driven bubble that we're in. So it all is moving together. But then if you look at the relative weakness of the cyclical movement, or the relative strength, whichever the case may be, back in 2018, Bitcoin led. And so we get to the December low, commodities, Bitcoin, equities, everything has bounced. Well, now Bitcoin, obviously it has been strong, no question about it. But it's still moving to the same cycle, or the same rhythm. And in an economic downturn, like I said, we are literally in an inflate or die scenario. Either they have to turn this battleship and somehow change the setup, the deflationary forces that are taking hold. They literally have to be turned, or I think there's no middle ground. It dies. And so what we're seeing here is like I said, these bounces that are camouflaging everything. But if the deflationary scenario does take hold, and knowing that everything has moved together, then why would you think? I mean, it's not logical. It doesn't pass the common sense test to me that if it tracked to the same pattern before, and equities turned down hard in a deflationary, we'll stick with that, deflationary environment, a lack to reinflate is what I started to say, or inability to reinflate scenario, then why in the world would you think all of a sudden Bitcoin is some safe haven? That it's gonna mysteriously all of a sudden just dance to a different pattern and it's gonna go to the moon while everything else is collapsing. I don't see it that way. Looking at the cyclical pattern, no way. And I think that gold is pretty much in the same camp. When you look at the overall cyclical pattern, what we're seeing here is things are bouncing, and it's all part of that setup. Now, like I said, it's all within the context of that inflate or die scenario. And I have to tell you that the scales are tipping toward the latter, but the jury's not out yet either. So we're at a critical point.
We'll have more with Tim Cyclesman Wood right after the break.
I'm Douglas Mason, CEO of Naturally Splendid, symbol NSP on the TSX Venture Exchange. Naturally Splendid is a biotechnology and consumer products company focused on the global cannabis and health markets. Naturally Splendid is expanding distribution in this rapidly growing market with products currently in Canada, the USA, South Korea, Germany, and Australia. To view our comprehensive company presentation and for more information, please visit our website at naturallysplendid.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Tim Cyclesman Wood. Tim, what effect has the trade war between the U.S. and China had on the markets, and has that artificially changed things? Or do the cycles still work the same way despite the external influences?
Well, I don't know that it's had a profound effect. It's just all part of the process. Of course, news affects the market, and I don't think that it overall that it matters. I do think that the news, to some extent, has been used to try to influence the market. Absolutely. I mean, a number of people have reached out to me and told me that they see that as well. I think there is a deliberate, we got a trade deal with China on a day that the market's down to try to, or when the market's at a critical juncture to try to save it. So yeah, I think there are some influences there, absolutely. But does it matter? No. I mean, it's noise, and it's a tool that has, I think, been used to drag this process out as long as possible and to try to save it. Because the reason we see some of these efforts, it goes back, that's just more jawboning. And I think the reason we're seeing this is because they know the seriousness of the unwinding of this bubble. And I think any and every method possible is being used to try to stimulate, save, and reinflate. And I think that news is one of those tools.
What do you think is going to happen with oil over the summer?
I think oil is pushing into an intermediate degree top. And, historically, oil, just from a seasonal perspective, oil tends to peak in the summer months and decline, thereafter. This year we've seen, a high earlier in the year. I think this is a counter trend to that previous high. And again, looking at the raw materials data, a simple overlay of the data, it is a front runner of oil as well as gold. And with it having broken down, the data overwhelmingly suggests that oil moves lower. Now, can oil continue higher here with, the threat of Iranian, war with Iran and blocking the Strait of Hormuz and all that sort of thing? Absolutely. And like I said, the intermediate term buy signal is currently in place. No question about it. But looking at that longer term, like I said, raw materials data, it paves the way, and you cannot dispute the relationship of the past and how it has been a historical leader of oil and gold.
Tim, for people interested in a more detailed look at what we've talked about today, where can they get it?
I know that there was some rambling there. And if people want to, have this make more sense, I have laid out a detailed scenario in the last couple of letters of a roadmap, if you will, of what we're looking at. It makes a lot more sense when you see it on paper and can study it. It's a pretty deep subject. But I've laid that material out. Anyone who's interested in getting their eyes on some hard analysis, it's available in the letter. I don't plug the letter much. Don't mean to sound like a salesman, but the information is out there. It's indisputable. This setup is absolutely amazing to watch. But everything I've laid out has been coming to pass, slowly but surely falling into place. But like I said, until equities crack and things get ugly, it's all masking what's going on underneath. So anyway, the research is there and available for anyone that's interested.
Tim, have a great Independence Day.
Thank you, Jim.
My guest has been Tim Cyclesman Wood, editor of Cycles News and Views on cyclesman.com. If you have any questions for Tim or any of our other guests, you can send them to info@howstreet.com. You can find us on Twitter @HowStreet, our YouTube channel, Talk Digital Network. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.